Welcome to the Business Credit and Financing Show. Each week, we talk about the growth strategies that matter most to entrepreneurs. Listen in as we discuss the secrets to getting credit and money to start and grow your business. And enjoy as we talk with seasoned business owners, coaches, and industry leaders on a variety of topics from advertising and marketing to the nuts and bolts of running a highly successful business. And now, to introduce the host of our show, financial expert and award-winning author, Ty Crandall.
Hello, everybody, and welcome to our show today. I'm really glad everybody could join us because today we're going to be talking about how fundable is your business. We get a lot of inquiries here at Credit Suite about this question. People wanting to know, can I get a business loan? Can I not get a business loan? We also have a lot of people that can easily get financing that think that they can't get financing. So today I wanted to dive in and talk about 25 different ways that you can get business credit and loans even when you can't get approved at a conventional bank. So let's start with some of the ones that you can. Look, the most coveted loans out there today are SBA loans, right? And there's a couple different kind of SBA loans that we'll talk about. One is called the 504. So SBA 504 loans are specifically for real estate transactions. And a 7A loan is for working capital, i.e., pretty much anything other than real estate that you may need the actual loan for. And they also have cap lines, which are basically lines of credit for working capital. Some are very specific to different industries. Some are pretty broad and help a lot of different industries. And then there's the SBA Express, which is a faster and just easier loan to secure. Now, along the line, you'll see the bottom of my slides if you're here on the live event or if you're watching this on video and YouTube after it's posted, you can see our link, creditsuite.com/get funding, all together, no dash in between get funding. If you're wanting more information on getting approved for a loan or just learning more about what you can qualify for, feel free to, I'll give you our phone number at the end. Also, feel free to go to creditsuite.com/get funding. Just so you know, we never charge you a dime of money to help you get money at all. Not a dime. We don't charge you when you apply. We don't charge you when you fund. A lot of lenders we work with offer us a referral commission if we help you actually secure the loan. So that's how we earn our money. And it's actually cheaper than us to go to those sources directly anyways, because we do so much volume that we pass on that discount to you. So if we could ever help you, if you just want somebody's ear to throw ideas off of or see what you can really qualify for or learn more about anything we're talking about, you'll see this link. I'm only going to mention it once, although you'll see it on a lot of the slides, creditsuite.com/get funding. So SBA loans are perfect loans for businesses looking to expand or for the purchase of a new business. You have to be an established business with good revenues and profits. What that means is it means that you can't be a startup and really get one of these SBA loans because they're going to want 2 to 3 years worth of tax returns, which is where it talks about good revenues and profits. With SBA loans, you really have to be able to provide tax returns that show you're generating more and more revenue every single year and that you're also making profits on the revenue you're generating. Now you can get loans from $200,000 to $12 million. They also have some smaller loans too that are even available under $200,000, and rates are usually the prime rate plus 2 to 2 3/4%. Okay, you can get 10 to 25-year loan periods. This is the reason people like SBAs, because you can get really long loan terms and pretty good rates. And some loans can be assumed by future buyers as well. So if you sell your business, in a lot of cases with SBA, that somebody else can actually assume that loan and take that loan over if you're to actually sell your business. Now, cap lines per SBA, cap lines is the umbrella program in which SBA helps business owners meet short-term and cyclical working capital needs. Ultimately, cap lines are their lines of credit. It's just that simple. The 504 and S7As are basically loans you can get from SBA, and cap lines really have to do with their credit lines that are available. And these loans are up to about $5 million is how much they can lend up to. And the loan requirements are the same as with all other SBA loans, which I'll probably talk about here in a minute. So when we talk about the SBA cap lines, there are seasonal credit lines, which is our advances against anticipated inventory and account receivables, if you have receivables or inventory. And these really help seasonal businesses. So if you're in a seasonal business, like you own a ski shop, let's say, where you're mostly busy during the winter and not as much during the summer, well, then your revenue is down during those times. So seasonal lines work really well for anybody that's in a seasonal industry that makes a lot of revenue during their on time time, and then their off time, not so much. Now, there's also contract line, and this finances the direct labor and material costs associated with performing assignable contracts. Loan or revolving credit is available. And with the SBA cap lines, most of these, they offer you a loan if you want it versus a credit line, but most people we talk to end up going with credit lines. A builder line, if you're a builder, designed for general contractors or builders, construction or renovating commercial or residential real estate. And this is used to finance direct labor and material costs, where the building project services as the collateral. So if you are a general contractor, if you are in the construction industry, you could use the project itself to serve as collateral to obtain one of these builder credit lines. And then you can also get a standard asset-based credit line. So these are for businesses unable to meet credit standards associated with long-term credit. So it's financing for kind of cyclical growth, recurring and short-term needs. Repayment comes from converting short-term assets into cash, and businesses continually draw from the line of credit based on existing assets and repay their cash as the cycle dictates. So again, these are really able for people that can't really meet the credit standards. So they're issuing people long-term credit, and they need money in the interim as they're waiting for that money to actually come in. Small asset-based line, asset-based revolving line of credit up to 200 grand, and this line operates kind of like the one we just talked about, but you don't have a lot of the stricter servicing requirements that you have with the other option. Okay, so as long as you can show that you could repay the loan, it's easier to qualify than the option I just gave you. Now, again, with SBA Express, as we talked about, this is just a faster access to a credit line with SBA. You can get a loan up to 350 grand, and interest rates vary, but it could be, SBA allows banks to charge as much as 6.5% over the base rate. So, it depends on the bank you're going with and how many points they want to make on the actual deal. Loans over $25,000 are going to require collateral. And again, loans under $25,000, you don't need collateral. With SBA, the reason we see so many people don't qualify is because you have to have good credit, cash flow, and collateral. Your personal credit, business credit needs to be good. You need to have that cash flow we talked about, verifiable per your tax returns. And then you also need to have collateral for about 50 to 70% of what you're actually buying. So that being said, that's why SBA is so hard to qualify, because you need all three of those. But we're going to talk about a lot of options today where you don't need any of those three. Some options like business credit, and some that if you just have one of those three, you can get approved. So with SBA, you need collateral for about 50 to 70% of what you're borrowing, unless you're going under 25 grand, and then not so much. So loan amounts on that 504 for real estate of 500 to 12 million, real estate purchase or expansion, real estate construction, real estate refinance, it's all possible. Major equipment purchase, that's what the 504 program is for. It's a very specific SBA program that for the most part deals with anything to do with real estate. Now, here's all the requirements. So I talked to you earlier about cap lines, the SBA 504, the 7A, all of these having basically the same loan requirements, and here they are. You have to be a for-profit company only, not a nonprofit. As a matter of fact, we find that most nonprofits can get loans. We have loans specifically for churches and all kinds of nonprofits, but what they typically want to see is tax returns that show a profit in most cases. But with SBA, it's for-profit companies only. You need about 50% collateral. They'll even let you use your house, your primary home as collateral, cash, stocks, bonds, etc. Any of those things can qualify. You have to have positive trends in sales growth. What this means is it means your revenue is increasing from year to year. They want to see the business is growing. No bankruptcies in the last 4 years on your actual credit report. 2 years time in business. Now, I might mention what the credit requirements are. They say they're pretty low, like 620. We've seen 780 borrowers get denied because of one derogatory on a major bank account. So they're pretty tough. They're pretty stringent. They want to see really good credit, no matter if their requirements on their website say that you can get approved with the 620. The reality is we've seen 750, 780 borrowers get denied because of credit. So you have to have pretty good credit, not just no BKs, but you really want to clean up any derogatory items before you even apply. SBA says this on the website. If you have any blemishes is what they refer to it as. You should have those corrected before you even apply. So if SBA is saying, hey, if you have any blemishes on your credit, get it fixed before you apply, that's a nice way of them telling you they pretty much want somebody with very solid consumer credit. And again, if you don't have that, no worries. We're going to talk about a lot of options today where there's no consumer requirements, credit requirements whatsoever. 2 years time in business, and you need to have experience in your industry. This is why they ask you for a resume, and so I think it's interesting because I think of these differently because I've been in financial services most of my professional career since I got out of the military. And what I found is that everything they ask for, they're asking for a reason. So if they want your tax returns, the reason they want those is they want to see that your revenue increases from year to year and that you're claiming profits. If they want a resume, it might seem weird. Well, they want it because they're looking for experience in your industry. So just keep that in mind. No matter what kind of loan or credit you apply for, you're being asked these questions for a very specific purpose. It typically reflects something specific that they're looking for. A well thought out business plan. They want to know what your projections are going to be for the future. You need to have your personal asset cover the debt or the business cover the debt. So they need to make sure that your personal income as the owner covers your personal debt, that you're not using the business income to cover the business debt or your personal debt. And they also want to make sure that the business revenue covers the business income, covers the business debt as well. I mentioned no bankruptcies, personal guarantees. You're going to have a personal guarantee with all owners over 20%. So look, I'm the king of talking about no personal guarantee because I talk about corporate credit a lot. But a lot of people then get confused and then start putting their chest out and walking through going, I don't want to PG anything. The reality is that it will take you many years of establishing your business and your corporate credit to ever get no PG loans. Almost all physical loans require a personal guarantee. Some don't. Some are you offset, and I'll talk about some today where you provide collateral. Well, you don't necessarily have to personally guarantee the loan because your collateral serves as the guarantee. But most loans, like SBA, like any other ones you're going to find out there, will require a personal guarantee. And most of them, it's always if somebody owns 20% of the business or more. Again, they say 620 minimum FICO. We've seen that you do not want to apply with derogatory credit at all. That's what their website stipulates as well. Any blemishes should be fixed. Cash flow, 1.2 versus debt ratio coverage. So what they're basically saying is they're saying the business has more than enough cash flow to cover expenses after any debt is paid, and that's debt coverage, D-E-B-T, not D-E-B. Business credit, personal credit, and bank credit must be strong. So something else a lot of people don't know is that you actually have 3 types of credit as a business owner. You have consumer credit, which you obviously know, TransUnion, Equifax, Experian. You have business credit or corporate credit, which is with Dun & Bradstreet, Equifax, and Experian Commercial. And then you have something called bank credit, which doesn't usually come into play unless you're applying for a bank loan. And if you are, then banks have their own internal score that they give you called a bank rating. And the bank rating basically just it has to do with how much money you have in your bank account. Ultimately, it's what it really comes down to. So what they're looking for is $10,000 or more in your bank account over the last 90 days. If you have 10 grand on average in the bank account over the last 90 days, you have a low 5 rating, which is the lowest acceptable to get a bank loan, and the highest is 70 plus. If you keep 70,000 in average on your bank account over the last 90 days, that gives you a high 5 rating, which is the best bank rating that you can get. This does not matter unless you're pretty much applying for a loan through your bank or SBA. If you're not, then any of the other options we talk about today won't even look at bank credit. A lot of them won't look at business credit, but some will, and we'll talk about that. So what if you don't have these things? What if you don't have really good credit, you don't have the cash flow and the collateral, you don't have all 3 of these, which is most people that are watching this, right? So that's when alternative financing comes into play. And alternative financing has become very popular, especially post-recession, because Dodd-Frank and a lot of the regulations that came down the pipe from the collapse in the economy due to the mortgage crisis really made it harder for lenders and credit issuers to lend and issue money. So what happened was all these alternative financing companies popped up and saw an opportunity and jumped in to fill that void. They started offering programs where banks just wouldn't help. This is where most of you will fit, because if you have any kind of strength, you can become lendable. Now, the first one is actually my personal favorite, unsecured business financing. This is by far one of the most popular programs we see because it works for startups and you don't have to have revenue verifiable. So you can get approved for anywhere between 10 grand and 150 grand. How much you'll get approved for depends on your current credit card limits. Now, if you're on your consumer credit report, the highest limit you have is 10,000. You'll usually get 5 to 8 times that. So that would be $50,000 to $80,000, for example, right? If the highest limit credit card you have on your credit report now is 20,000, not an authorized user, your real account, then that's going to get you 100,000, 160,000 in finance, or 100, 150,000 in financing from what your current limits are. So this is typically about 5 times more than you'll get on your own. A lot of people, it's interesting, I talk to a lot of business owners that think because they have good personal credit that they could just walk in their bank and get a credit line or loan, and that doesn't work at all. And then they're surprised and they come and they say, why can't I? And I'll say, well, how is your business credit? And they'll say, well, I don't have business credit. I'll say, well, then what are you thinking? You walked into a bank to get a loan for your business and you don't have any credit. And they said, but my consumer credit's good, but you're not applying for a consumer loan, you're applying for a business loan. So you have to keep in mind that when you walk into a bank with good credit, you're not going to typically get a high limit credit line, maybe a credit card for the business, but even then they're going to pull your business credit. We've seen businesses with 3 million or more in revenue get denied for $10,000 credit cards at their bank because they didn't have strong enough business credit. So with this program, you'll usually get about 5 to 8 times more money than you get on your own, even if you walk into a bank, because they're applying for credit at the same time with a multitude of sources they know will approve you. So the end result from what we've seen in every test is that it's about 5 to 8 times the amount of money that you get on your own. You're ultimately getting 5 to 8 credit cards or credit lines. I call these hybrids because they take the best benefit of credit cards, as you'll see in a minute, and they combine it with the best benefit of credit lines, which is what makes them so unique and something you just don't find in the marketplace today. So I like them because of this. You're getting 5 to 8 business credit cards. So what happens is they start competing against each other, and it becomes very easy to get your limits increased shortly after you get approved and ongoing, because you know and I know that, when you have a higher limit credit card, that tends to be the one that you use, right? Like the one, I have one credit card in my wallet that I carry with me, one personal, one business, and they both have the highest limits, right? That's just kind of the way we are. We tend to go to our higher limit account. So because they see competition and other people have given you credit, they want to raise the limits to be your higher limit account. So that's one huge benefit. It creates competition, which helps you get your limits increased shortly after approval and ongoing, because they want to be the higher limit account you have. So here is one of the best benefits of this program. It's 0% intro rates for 6 to 18 months. And after that, it's like normal credit card rates. Whatever you'd normally pay on a credit card is what you get. If you're getting the business cards with this program, the rates are a little higher than consumer credit, but the limits are a lot higher too. That's the way it works in the commercial credit world. So 0% intro rates for 6 to 18 months. So this is really a cool option because you can get 100, 150 grand at 0% even as a startup, which is one of the better programs, which is why I think that it's one of the better programs that I've seen. You don't have to have any collateral or cash flow requirements. So you don't need tax returns or bank statements, and you don't need collateral either. This is why you can get approved as a startup. Most places won't approve you as a startup because they need tax returns or bank statements. So if you don't have seasoning that you can prove through bank statements or tax returns, you can't even apply. So On Deck is a great one of these. This example. On Deck's amazing. They have a revenue lending program that I think is one of the best in the industry. But if you walked in there with an 850 credit score and no revenue, they couldn't help you. If you were 4 months in business and an 850 credit score, they couldn't help you because they're based on cash flow. Well, this program, you don't need collateral or cash flow to get approved, which means you can get approved as a startup, and you can also get approved with a guarantor as well. So, like, if you don't have the credit to qualify for this program, you can use a family member, a friend, a business partner, a colleague that does. And again, we even have sources that take care of that corporate paperwork for you. So let's say you started a business, you're just getting it off the ground, you need 50 grand, you don't have collateral, you don't have cash flow, your credit's maybe 620, but you have somebody that has a high credit score that wants to either sign on as a partner or get equity in the business or get a return from you or whatever motivation they would want to help you as a guarantor. There's a lot of them. Then you could use use them as a guarantor to help you qualify for this program too. It's one of the easiest and fastest ways to get financing, especially for a new business. It's the best way we've ever seen to get financing for a new business. It takes about 3 weeks or less to get your money. So it's a really, really, really creative program for those people that are kind of newer and starting up. And even those that just don't want to show tax returns, or people that want a good 0% or low rate financing for an extended period of time. You can get approval same day with this program. Approval will have a range of potential funding. So the approvals that we get from the funding sources say, hey, you're going to get $50,000 to $70,000 in funding, and break it down that way. And they usually give you 2 options, standard or business cards. So I'm a big fan of business cards for an obvious reason. They report to the business credit reporting agencies. So not only will this program help you get physical money you could use to buy stuff, but you also build your business credit at the same time, because the credit with this program that you get, those 5 cards, report to the commercial credit reporting agencies, Dun & Bradstreet, Equifax, and Experian Commercial. So you get money and build your business credit at the same time. Standard cards report on your consumer credit reports. So why would you want standard cards? Because it gets you more money. So with this program, we see people get approved for $50,000 to $70,000 with business cards only, and then maybe you'll get an approval of $70,000 to $100,000 if you want both business and standard cards. So usually you have that option on the approval. They tell you how much total money you can get and how much is just business cards, and then you decide if you want all that, part of that, etc. Again, the business cards do report to the business credit reporting agencies. So this helps you build your business credit while you're getting money. Why does that matter? Because what happens is you're getting a bunch of cash credit at 0%. Then they all report to the business credit reporting agencies, putting high limit revolving accounts on your commercial credit reports. Once that happens, then you can start to walk into Staples, Lowe's, Amazon, Home Depot, pretty much any major store, and give them your EIN and not your social, and start to get approved. This is a real cool way to shortcut the business credit building process, because instead of needing vendors like Uline and Quill to buy stuff you may or may not want or need, you could use this program, get a bunch of access to cash credit that you could actually use to do the same thing. Cash out is available. So again, this is why I love this program so much. You have the benefit of credit cards where you have 0% rates for 6 to 18 months. You do not see that on credit lines. You do see it with credit cards. You have it with this program. But you also have cash out capability. Unlike credit cards that charge you cash advance fees at 20% plus, with this program, you could take almost all the physical cash out. If you get approved for $150, you could pull almost $150 out in physical cash. Now you've got $150,000 at cash at 0%. It's pretty ridiculous, because you're combining the best of both worlds when it comes to credit lines and credit cards. And they can liquidate it for about 90 to 100%. Some banks have like a 3% fee to do the cash out, which is why I say 90 to 100. It's actually about 97 to 100% you can cash out. And you don't have to take all the money out if you don't want to. You could just take some out. And again, as I said, the 0% still applies. So it's a hybrid. It gives you the best benefits of credit lines and credit cards at the same time. Now, you've got to have a good personal credit score or guarantor that does 680 credit score higher. As I mentioned earlier, with most funding, most loans, you need a strength. The strength could be cash flow, it could be credit, it could be collateral, but you need some kind of strength. If you don't have a strength, well, at the end of this, we'll talk about some options that still work for you. But if you don't have a 680 credit score higher, remember, you could still use a guarantor that does. Maybe it's mom, maybe it's dad, maybe it's brother, maybe it's somebody that says, man, I love your business idea and I'd invest time and money, but I'm too busy with my primary job. And you say, well, hey, you can't help me. You signed as a guarantor here, and boom, I get the money, I fund the business, and I'll give you X in return. There's a lot of different options, and what's nice about a guarantor is that the credit won't report on their consumer reports, right? If you go with the business cards, they only report on the company's business credit report, of course, unless you were to default. Utilization under 40%, and we've got a source that will rapid rescore you within 48 hours if you're above that. So let's say an individual or overall your debt, your balances in relation to your credit limits is too high. We've got a source that if you pay that down within 2 days or less, they'll have your credit profile updated so you can then move forward and get approved. 5 to 8 inquiries on the report in the last 6 months, and again, We've got sources that have inquiry removal services. They charge $50 per inquiry per bureau. Just so you know, I don't recommend or talk about this stuff until I go through it. I've went through this program to get money. I'm going through the program right now for inquiry removal. So I had some unauthorized inquiries and I wanted to check out this inquiry removal service. So I've actually worked with them and it's working really, really well so far. No BKs in the last 3 years. They're really looking for no recent derogatory items on your credit report to get approved. And again, they charge about an 8 to 12% fee. We see it be about 9.99, 10%. And they put it right on the cards, just like an SBA loan. So keep in mind, remember we talked about SBA, the lender is allowed to charge 6% above SBA's fee. So it's not uncommon to see 4 to 6% or more fees even with an SBA loan. With this one, you're getting 0%, but you're going to pay the finance source about 9 to 10% fee that usually our clients just roll into the cards when they get them. So what happens is they get a card for $20,000. They just use that $20,000 card to pay the $1,900, $2,000 fee, for example. And because of this, you might not want to get the full amount that they can approve you for. You're sent an invoice a little before or once you receive your actual card. And like I said, many of our clients pay that fee on the card. Others find the ones that are the hardest to liquidate, to pull the cash out of and put all their fees on there. You don't have to figure this out. The funding sources we work with help you through this actual process. So another one is a credit line based on invoices, and this is a credit line that has no consumer credit requirements. You can get $1,000 to $100,000. Approvals go up to $30,000 with a simple online automated approval. For automated approval, no paperwork's needed. No credit pulls even required. This has really quickly become my second favorite funding program. We just rolled it out less than 90 days ago, and I think last month we had over 30 clients fund on this program. We are reaching out to every customer that we have tried to get a loan for and not succeeded, and many of them are getting this program. It's really super simple to qualify for. So what they're ultimately doing is they're going to look at your accounting or your banking software. And even though I say that it's based on invoices, that's one of the products. They have a few different products that aren't even based on invoices. So if you have consistent cash flow going through the bank account, or you have invoices from another business or individual people that owe you money, which is called AR, account receivables, then this is a really good option if you have those two things in place. Even if you don't have the $10,000 in revenue going through your bank account that a lot of sources require. And it's just super simple. And you get approved online. It's automated. You don't need tax returns, bank statements. They don't even pull your credit. All they're doing is just looking through their technology through the consistency of your account receivables or income to get you approved. If you have tax returns, which is what they call supporting documents, they'll get you approved up to $100,000. So again, one of the simplest and easiest programs I've seen if you do have money going through the business bank account or have receivables now. And again, supporting docs are 2 years of bank statements. Funding happens in less than 72 hours. And again, guys, we go through this stuff to test this stuff. We have a credit line through this exact same program. I think we even used it once, actually months back, and paid it back to see how the payback worked. So this is a really good program, and it took us, I think, within 48 hours, we were approved and funded. And once you get your line, you can use as little as much as you want, right? That's the purpose of a credit line. You kind of use as much as you want to use. You won't pay payments until you use your line and only pay on what you use. Again, the benefit of a credit line versus a loan. When you start to pay, your payments will range from 12 to 24 weeks. This is a little different. On a credit card, we're used to a minimum payment. With this one, they just basically figure out whatever your payments are over 12 to 24 weeks, and that's what their payback term actually is on this program. There's no UCC filing, so the loan doesn't show up as an adverse reporting on your credit report. I shouldn't say that. I mean, UCC filing isn't a negative reporting. I just tell you this because a lot of lenders will tell you, yes, something will report on your business credit reports, and it actually doesn't report as a trade line. It just reports as a UCC filing. And a UCC filing is just a bank's way of letting others know that you have a loan with them, and it reports on a certain area in your credit report. But this one doesn't have any of those. And the fees are the lowest fees I've ever seen of any funding product that exists. It's about 0.5 to 0.07% of the original invoice amount. And I did mess this up because it's actually 0.5 to 0.7%, not 0.05. So it's 0.5% to 1% in fee per the week that the money's outstanding. Here's just a real example. If you had $1,000 advance, over a 12-week term, you'd pay $5 weekly in fees. Okay, so that gives you a really good idea of how cheap it is. 0.5 to 0.7%. About a 0.5% is the fee you pay on the money outstanding. That's pretty ridiculous. There's no origination fee. You receive 100% of the invoice value. A lot of them will charge thousands of dollars in fees. With this product, you don't have any. So again, what are the requirements? No credit requirements, no collateral requirements. They're just looking for cash flow going through the bank account, or that you manage your money responsibly using accounting software like QuickBooks, and or that you have receivables with another company and individual. Example. Okay, applicants will need 6 months of invoice history, but again, this is all through your accounting software or through your bank account, and you need to have annual revenue of 100,000 or more to get approved. 500 in revenue increases the chances of approval and increases the amount you'll be approved. You need to be in business about 9 months or longer, and again, because they're looking for some kind of history here. They want to see some kind of history of revenue or money going through your actual accounting software. Your bank statements, accounting software is what's used for approval. The bank statements should show you're making profits. No business or consumer credit reports pulled at all. Okay, even revenue lending from places like On Deck pulls business credit and consumer credit. With this, there's no credit pulls, no inquiries, and you won't need any kind of collateral to get approved. So this ties in with something else, which is called account receivable financing. And this is a whole different kind of financing, but this other one's kind of like a hybrid of AR that I just talked to you about. And with AR financing, this is when a business owes you money, for example, and that's called a receivable. And those receivables are basically used as collateral. You get approved for 5,000 up to 20 million, so really wide range of financing, and you get up to 80% of the receivables could be advanced within 24 hours. So let me give you a couple common industries as examples here. One is construction, one is medical. So if you're in the medical industry, for example, you're dealing with Medicare, Medicaid, and health insurance companies. This sometimes takes weeks or months to get paid. Well, with this program, you get 80% of what's owed to you the next day. Then the lender collects the money from Medicare, Medicaid, the health insurance companies. When they get paid, they give you the 20% minus their fee. Same thing with construction. Let's say that you're in the construction industry. Let's say you're a plumber and you do a bunch of works for MI Homes, which is a big builder down here in Florida. Well, then if you do that, you already know you wait a long time to get paid, because in a lot of cases, the builder has the house finished and they get paid before they pay you. You could go months before getting paid. Well, with this, you get 80% of what's owed to you the next day, and then 20% minus their fee would get paid once they collect, and they do the collecting for you, which is pretty cool. 1.25% to 3% discount is what you pay. So the second lowest program I've ever seen rate-wise. The one I just showed you was the lowest. This is the second. 1.25% to 3% discount rate for every week the money is outstanding, and but they usually charge you a 4% fee the first time you get the loan. So remember, that other program I just showed you doesn't have this origination fee that the other program, or that these programs have with AR. No credit score requirements, so you can get approved for this no matter how good or bad your credit is, which is pretty cool. And one of many programs that have no credit requirements we'll talk about. Receivables have to come from another business or the government, not an individual. You got to be open a year. Medical receivables, construction, and anybody else that deals with business to business can qualify. Medical has a little bit more stringent requirements because, well, I imagine it's a pain in the butt to collect from Medicare, Medicaid, and health insurance companies, which is why lenders say you need to have about 600,000 in receivables on the medical side to qualify, but that only applies if you're in the medical field, such as a doctor's office, for example. So revenue lending and merchant cash advances, two programs here. This is the fast money. It's the fastest and easiest money you'll get if you have consistent revenues. You can get it in about 3 to 7 days, I say. We've seen funding in 24 hours, and we've seen brand new loans get approved in less than 3 days, so it's pretty quick. It's easy money. There's no credit score or collateral requirements. Some lenders do have credit score requirements, but they're as low as 500, but there's no collateral requirements for this. All that's needed is 6 months of your bank statements and or merchant statements. They're always going to want your bank statements. I've found that if you supply your merchant statements with your bank statements, it helps make the approval easier and faster. And loan amounts are equal to about 12% of your annual revenue. So If you do $200,000 in annual revenue, you get 12% of that, which is 24,000, for example. So about 12% of what your annual revenue, roughly, maybe a little more, maybe a little less, is about what you can get approved. And we also deal with seconds on these as well. So that's for the first loan, and then a lot of lenders just deal with seconds behind the first loan. So you can get even more if you wanted to. Now, a lot of people don't like these because they're daily payback. They deduct money daily out of your bank account, but I can tell you it's becoming more and more common that they do weekly or monthly payback, where they just deduct the money once a month or once a week. Sometimes weekly or monthly paybacks are also available with lower risk. So it's a 6 to 18 month loan. We've seen them go up to 36 months. We've seen them as short as 3 months. If the first time you ever get one of these, they're probably going to want to go about 3 to 9 months. And then as you prove yourself and pay down half of the first loan you get, they'll usually offer you the longer terms of 12 to 18 months. Loan amounts up to $500,000. Over 70% do come back and get more money, which means from what we've seen, over 70% of clients who take this loan end up coming back and getting more loans after the fact. And they make it really easy to do. Again, we like to test as many of these products as we can. We've went through this, and I got to tell you, as we got half of it paid, they kind of reached out to us through phone and email and said, hey, we want to give you more. We said, no, thank you. We just kind of did this as a test. The more closer we got to 100% payback, the more aggressively they were calling us and emailing us. So once you're in this, they make it super simple to come back and get more money with just usually as much as one bank statement review. Rates are all over the board, 10 to 45%, because it depends on risk. A lot of people believe this is very expensive money, but from what we've found, you can get rates within 3% or so of SBA if you're low risk. If you have good time in business, good bank account management, better credit, those things can help make this a really good loan to consider. But if you're high risk, your credit's bad, you don't have a bunch of time in business, you can still get approved. Credit inequality, industry, bank account management, all those things really tie in to the risk. And fees and interest are 100% tax deductible. And I tell you this because, to me personally, I don't care about rates. I think I've been in lending most of my professional career, and I've seen that the rate you pay is determined based on the risk that you are. So you really, most people shouldn't complain about rates they get, because you're getting the rate because you deserve the rate. Like if you were lower risk, you get a better rate. And no matter what I've dealt with, whether it be mortgages or consumer finance or business finance, it's all the same. Your rate determines the risk. So ultimately, as long as you can write off all that you pay in interest and get it back, I think that's something important to focus on. Can't be currently in trouble, such as bankruptcy or tax liens. You have to have 120,000 or more in annual revenue. If you have compensating factors, like let's say that your bank account's really good, you have a bunch of money left over at the end of each month, you don't have any NSFs, those type of things, then they'll go even as low as $5,000 a month with revenue, especially with merchant cash advances. You need to be in business for 12 years or longer. Again, if you have enough compensating factors, they'll go down to 6 months, and that's very common even with merchant cash advances. You got to have consistent deposits. You can't be a real estate agent with 2 deposits a month. They want to see consistency. They don't want to see you're overdrawing the bank account. Like any loan you get, what they're concerned about is, am I going to get paid back? So if you're overdrawing the bank account all the time, well, that's a clear indication they might not get their money back. They want you to have positive ending bank balances at the end of each month as well. So revenue financing also offers a credit line option. So a lot of people don't know this, but some funding sources will now offer you a credit line with the first loan. So what happens is these loans started to come out, and these other companies started to come behind the first with seconds. So they said, okay, you got 20,000 here, we'll give you another 10. And these banks, some of them obviously don't like that. So what they do is now they offer credit lines. So you can come in and get a loan for 30 grand, and then they give you a second credit line for 10 grand right behind it, for example. So loan amounts are equal to about 20,000 for these credit lines. Sometimes lenders will want to see tax returns, but if they're usually offering you this, they feel the risk is low enough where in a lot of cases they might not need it. Rates vary based on risk, exactly as I talked about before. But a great other option to get a credit line, even if you don't have great credit. There's not a ton of credit lines out there if you don't have good credit. A 90-10 term loan, this is still in testing. The concept sounds brilliant, but reality is that we haven't yet seen one fund, and we've seen them exceed the estimated funding date. So we're still waiting. We've got a whole line of people ready for this program. We're still waiting to see how legitimate this is, but I wanted to throw it in because, again, I talked to you about everything that's out there, and I always like to define what we do is we deal with every legitimate funding program that's out there, meaning there's a lot of them that we've found not to be legitimate. This one's on the fence. We're not sure yet. All the credibility checks have made sense, but we haven't seen the deal fund. Loan amounts of $500,000 plus, interest only, available for 10 years. You can get it amortized for up to 30 years, so very comparable to SBA. 5 to 10% rates, very comparable to SBA. No upfront application fee or due diligence fees to get your letter of interest, letter of intent. Startups are welcome with this program, which is interesting. So once you get a letter of interest or letter of intent, then you'll put 10% down into an insured escrow account. The lender insures the escrow account, so you know you can get your money back if the deal doesn't fund for any reason or you decide to pull out. And the lender pays the insurance bond. So they pay the insurance so you don't have to. After that letter of interest is issued, then funding is going to take place within 50 days. They give you a letter of interest. You say, okay, I'm in. You put your 10% down into the escrow account. By the way, it's called a 90-10 for a reason. The 10 is the 10% down you put into an escrow account, and the 90% is the amount that they'll finance, and then you do get the 10% back once the deal actually funds. So it's not a credit score-based program, but they do want to see pretty good credit. Loan rates, not the approval, will be based on consumer credit quality, so you're going to pay a higher rate if your credit's not good. The better the scores, the better the deal, the higher the loan amount, the lower the rate, basically, from what we've seen with this program. You'll also need a strong executive summary, 2 years tax returns. If you're a startup and you don't have 2 years business tax returns, they'll accept personal tax returns instead. And once the file is submitted, again, you're going to get a letter of interest within about 24 to 72 hours. And this letter of intent that you're basically given prompts you to put the money in the escrow account, and then funding is scheduled to take place 50 days later. So the problem we've seen with this that we do not like is that your funding ties in with a bunch of other files fundings. So we have one that is now past the date it was supposed to fund, and the reason it's not funded has nothing to do with our customer or our file. It's because it's in a pool of loans that's supposed to close at the same time, and there's a problem with another file. So in my world and experience in finance, anytime it's hard enough to get your own deal approved, when your approval kind of rests on other people's approvals, it makes it even harder, which is one of the things we don't like about this, but it definitely fills a niche that other programs just don't. If the applicants want loans under $500,000, they're also available with this program. You can get approved for $50 to $375. Instead of it being a 90-10, it's an 88. It's an 88-12, which means you need a 12% in that escrow account, not the 10%. And everything else I've told you is exactly the same as the other. So securities financing. You can get financing regardless of personal credit quality, no personal credit quality requirements, and get a credit line if you have stocks or bonds. Now, you might say, I don't have stocks or bonds. Well, the reason you need to know this is because even if you don't have stocks or bonds, you may have someone around you that does, right? So maybe you have a family member, a friend, or somebody that loves your idea and would pledge their assets as collateral for you to be able to get the financing. Then you wouldn't even need the stocks or bonds. Somebody else could have it. So something to keep in mind even if you don't have them. You can also get approved if you have someone wanting to use their stocks and bonds, as I just mentioned, as collateral for financing. Personal credit quality doesn't matter. There's no consumer credit requirements. You can get approved for as much as 90% of the value of the stocks or bonds. So if you've got stocks worth 100 grand, you can get 90,000 with this program. And rates are often less than 2%, making it one of the lowest rate credit lines you're going to find, and you still earn interest on the stocks and bonds. So really cool program. I love this program for anybody that has stocks or knows people that do, because you get a credit line with no consumer credit requirements, which there's not a lot of programs out there that are that way. You get 90% of the value of the stocks or bonds, and you don't have to sell the stocks or bonds. You not only get to keep them, but you also get to still earn interest on them. So let's say, Grandpa says, man, I love that business idea you have, and I'd love to be part of it if I could. And you say, hey, I need 50 grand. and I to get this thing off the ground. And, do you have 50 grand in stocks? And he says, yeah, I got, more than 50 grand in stocks. Well, can I use your stocks as collateral for the loan? You still keep the stocks in place. You still earn the interest return on the stocks. It's just if I ever default on the 50, then, they come and take the 50,000 from your stock. So you and I can even work something out where I can even pay it through you so it's getting paid, etc. So a really good program for you, or if anybody else around you has stocks or bonds, because to get a credit line with no consumer credit requirements and still keep them in place, etc., is a pretty strong option. Alternative SBA venture capital. So these are not SBA loans and not as stringent approval requirements, much easier to get, but with similar terms as SBA loans. So funds come from private investors, alternative lenders. There's no collateral required like there is for SBA. Loans from $50,000 to $500,000. Venture capital obviously goes much higher. $500,000 are available with with longer closing times. These could take 3-6 months or sometimes longer. Nonprofits can qualify. Like I said, we have specialized funding for nonprofits, including for people that are that own churches, or people that are looking for financing that have a church. 2 to 4 year loan terms, 8 to 25% rate. We do see longer loan terms as well. I consider the 90-10 to be an alternative SBA type loan, and you've already seen those can go to 30 years. So 10, 20, 30-year loan term isn't uncommon, but a 2 to 4 year loan term with pretty good rates is fairly common. Looking mostly at high gross profit margins, what they want to see is that you have tax returns that show a profit. They do like to see better credit, but again, we now have more of these sources that even down to 650 credit scores, average credit, they can help you. Basically, good credit and financials are needed for approval. That's mostly what they're looking for. Or if you have 650 or higher, there's still a good chance to get approved. And there's more options that are even available without the tax returns, which used to be a major requirement. So the bottom line is this space of, do you have revenue or do you have good credit or a guarantor that does, is really fruitful space. There's a lot of loan programs that fall in those two criteria. If you have revenue or if you have credit, there's a ton of funding options that fall if you have one of those two things. And this is one that they like to see both. If you have both, it opens up the door to a lot more options. But if you only have one, there's still a lot of funding options that will consider these nowadays, even if you don't have good credit and tax returns. Purchase order financing. So this is if you have purchase orders, somebody that basically you need money to get the purchase order filled. So let's say that you have a big order come in and you need to buy the supplies to fulfill that order. Well, you could take all the money out of your bank account to buy those supplies, or you could buy PO financing, and purchase order financing would get you what you need to fulfill those orders. 5,000 plus, there's no cap to how high this goes. Up to 95% of the purchase order can be filled. So you get a huge order, you're like, holy heck, like I have to empty out my cash flow to fill this thing. Well, you can get up to 95% financing with this, so it helps you keep your cash flow safe. 1 to 4% rate, low rates, no credit score requirements, none. Letter of credit issued initially, that's what the lender does. The lender goes to your supplier and says, I'm going to pay you once you put the supplies on a boat and prove that they're shipped. Cannot be unfurnished goods. You can't have something as part of a manufacturing process. It's only part of the way done that you need to buy, and all you need really is an application copy of a purchase order for approval. Book of business financing. Commissions from the book of business service collateral. This is only for insurance agents, okay, or people looking to buy an insurance firm. One of my buddies actually fell into this category. He was thinking about starting an insurance agency, and I said, hey, man, you find one with existing book of business, like I'll hook you up with this source and get a loan, and you could get the money from their book of business to buy their actual agency, which is pretty cool. 3D 10-year loan term. This is one of the best loans I've ever seen for good loan terms and low rates outside of your typical SBA type loans. 4 to 9% plus the prime rate. 520 credit score or higher. Credit's not really what they care about. You can get about 120% of the surrender value. If you don't know what that means, it's because you're not an insurance agent. If you are an insurance agent, apparently you know what this means. I am one of those people that falls into that non-understanding category. But I will tell you that 120 of surrender value is what you would sell your book of business back to the company for. So let's say you're with Allstate Allstate, right? And whatever you would sell your book of business back to Allstate if you retire for, you can get 120% of that amount with this program. And no State Farm agents, because for some reason State Farm agents apparently don't own their book of business. It's still owned by State Farm. Not sure the specifics on that. Equipment financing. You get existing equipment or new equipment that you want to purchase. You can get financing and leasing. Leasing, you have to be in business 1 year to get, and in better credit. Financing, you can get even as a startup, even with challenge credit. So why is this important? Because I talk to a lot of people that say they want money. I need money to get this business off the ground. Well, what do you need the money for? So a friend of mine fell into this category. She said, we need money. We need like $100,000. I said, okay, you're just starting the business. What do you need the 100 for? And she said, I need about 20 for payroll, and then I need about 50 for equipment, and then I need the rest for just an extra account. I said, well, now it's a whole different story, because you don't need a $100,000 loan or credit line. What you need is equipment financing for 50 of that 100, and then a working capital credit line for the rest, it sounds like. So you need to figure out what you need the money for, because if it's to buy equipment, even as a startup, you can get the money you need to buy equipment. And what we did in her case was we actually used the unsecured financing option I told you about to get the cash, and then we used the cash to pay the first and last month's payments for the equipment financing. So we actually were able to get her a massive credit line of like 100 grand, and then we only used a little bit of that to pay for the first and last month of the equipment financing. Then she still had the credit line available and used the equipment financing for the equipment. That kept her credit line in play. It still left it available. So that's why I want to point that out. 10,000 to 2 million, 24 to 48 loans, 5% to 55% rate. Why do you see these wildly vary like this? It has to do with risk. I love funding programs where you see these wild variants. What's my rate? I don't know, could be 5% or 55. That's a pretty big range. Yes. You know why it's a big range? Because they have really good financing for people with good credit and really good financing for people with bad credit. And so I like these wide ranges because it shows me the lender and the program type is willing to work with a lot of different kind of risk of borrowers, which I think is good with equipment financing, meaning you can get it and get really good terms if you're low risk, good time in business, good credit scores. But if you're really newer in business and bad credit scores, you can still get approved. 580 credit score or higher, 650 is preferred with a lot of programs. 1 year time in business for leasing, but not for financing. You can get that as a startup. You can also, third type of program I'm throwing in here, you can also borrow against equipment you already have, and they call that option CAD or equipment sale leaseback, because you're ultimately selling the equipment to the lender and they lease it back to you. So maybe you have a big backhoe or something that's worth a bunch of money. Maybe grandpa does, brother does, somebody else in your family does. Well, then consider this, because you could use that equipment to borrow against to get physical cash, and you can get financing to buy initial equipment even as a startup, which is another reason I like this. Inventory financing, $250,000 to $500,000 loan, line of credit, I should say, 2 to 5% rates, 520 credit score is all that's needed, but you got to have a bunch in inventory, about $500,000 in inventory. This won't work for most people on here. If you have a bunch of inventory on the shelves and you need access to money, this is one of the best programs you're ever going to find, because it's really low rate, and you also get a working capital credit line with really no consumer credit score requirements. You just have to basically prove that your inventory reasonably. Okay, so that being said, this is a really good program if you do have inventory, and all you need is a list of the inventory in an application. Commercial real estate financing, $75,000 to $20 million loans, 55 to 65% loan to value, 2 years of financials, tax returns, P&L, and debt schedule for approval. You've got to have cash flow to make the payments. What I call common sense. You have to have the money to pay the payments. Of course, that's usually a requirement with almost everything, especially with commercial real estate financing. 650 score higher. You're going to have a personal guarantee, and you're going to have assets, usually the commercial real estate or equity in the commercial real estate. 4 to 5% interest, low interest. $5,000 to $20 million loans, which I already said there are $500,000. They have some programs with SBA that are higher than the ones you get with non-SBA. So 401k financing, borrow 100% about what's in your 401k. Very similar to the stock financing I told you about, but this one uses you or somebody else's 401k. But you get a 5-year loan, which is cool. Prime rate +2, so 4-6% range is usually the rate. 500 FICO score. I don't even know why that's on here because I don't think this program has any consumer credit requirements. We've never had somebody denied because of consumer credit quality. The lender does charge a fee with this. They roll into the actual deal. I tell you this because most loans we deal with just do not have any kind of upfront fee. AR financing does, they roll it into the loan. This one does, they roll it into the loan. So I'd like you to know about any of those fees, but they're rolled into the loan just like SBA fees are rolled into SBA loan. No penalties for rollover. So it's IRS proven tax strategies where you could basically, if you think about what a 401k is, you're investing in other people's businesses. You're investing in other companies, right? With 401k financing, all you're really doing is shifting the investment from others' companies into your own. That's the easiest way to explain what it is and how it really works. And again, creditsuite.com/get funding if you want to get approved for any of these. So business credit. Now, business credit really is the catch-all. Okay, I call it the catch-all because you don't need collateral, cash flow, or good credit to get approved. And we talked about a bunch of options here. If you went through them all, you'd see we've actually got way more than 25. But every single option, usually they need a strength to lend you money. They need some kind of collateral, whether you or somebody else's. They need good credit, whether you or somebody else's. Or they need cash flow. And if you have one of those three, then you can get financing. There's a bunch of options. If you don't have one of those three, then the question becomes, what makes you lendable? If your credit's bad, it already reflects that you have had issues in the past paying your bills. And if you can't have anybody around you that has good credit that wants to sign as a guarantor, that's kind of a problem because there's nobody around you that trusts you enough to let you use their credit. This is how lenders look at this, not my opinion. Okay, so then the lender says, okay, maybe you've got a proven business model. Nope, you don't have any cash flow yet. So right now, all you have is a concept. You don't have a proven concept, or you don't have a proven concept. You don't have collateral to show you've been, that you paid things back the way the lender would want to. So the lender says, okay, give me some kind of collateral. If you have some kind of collateral, we'll lend you money. We don't have anything to offset your risk. Well, you just painted a perfect picture of high risk for a lender that's going to probably prevent you from getting most business loans. So what do? You create a strength. So that's what I love about business credit. Business credit, you can get approved for a bunch of money. You don't need collateral. You don't need cash flow. You don't need good credit. And what you're ultimately doing here is you're creating a strength. Since you don't have good credit, cash flow, or collateral, let's make a strength for you, and we'll make the strength by creating a solid commercial credit history. And I have a guide right here, creditsuite.com/EIN, if you're interested in getting a 4-step guide that maps this out, what I'm going to go through with you. So immediate vendor credit, so that you can get immediate vendor credit approvals, okay? And vendor credit is basically Uline, Quill. It's companies that offer net 30 accounts. They're not revolving. They need the balance that you pay, that you owe, pay back in full within whatever their net terms are, usually 30 days. You get high limit vendor, store, fleet, and cash credit cards. So let's look at each one of these. Store credit cards. Again, I go back to this question of what do you need the money for? If you need the money for computers, well, that's Dell. If you need the money for furniture, well, that's IKEA, that's Amazon. If you need the money for supplies, well, that's Staples and Office Depot. Maybe you're in the construction industry. Maybe you're flipping houses and you need money to be able to rehab houses. Well, all of that is store credit cards. Basically, almost every major retailer you can think of, from Amazon to Best Buy to Sprint to Sears to Sunoco, Costco, and everywhere in between, that's that kind of credit. Fleet credit is for auto vehicle financing, or it's actually for auto vehicle maintenance and repairs and fuel. This is really popular with truck drivers. So if you drive an 18-wheeler, fleet credit is the saving grace because it costs like hundreds, $400, $500, I think $600 to fill up a big rig's gas tank. So instead of using your own personal credit cards, now you can get business credit cards for that purpose, plus all your repairs, plus fuel, or do it for your primary vehicle. And even cash credit cards, which are Visa cards, MasterCards, you can use anywhere. Now, none of this requires a personal credit check or a guarantee. That's why personal credit doesn't matter, because they're not even checking your personal credit report. You don't need financials or bank statements needed either. That's why revenue doesn't matter, because they don't need to verify any of your revenue through bank statements or financials. So you can get approved as a startup. Remember, when you ever hear any kind of financing that says you can get it as a startup, that just simply means you don't have to provide income docs. Because as a startup, you don't have bank statements and tax returns. So you can't get any of those programs that require them. But if you are a startup and you're applying for a program like this that doesn't have to look at financials or tax returns, you can get approved. Okay, so business credit's a catch-all because cash flow, credit, collateral, these other things that you do need with the other programs, you just simply don't need with business credit. So this credit reports only to the Business Credit Reporting Agency. It gives you that strength I talked about. It helps you build that asset of your business credit profile that you can then use as a basis to start getting loans. Your utilization isn't affected, so you can use this credit, max out the $10,000 credit card that you have, and it won't hurt your consumer credit at all because none of it reports to your consumer credit. There's no inquiries on your personal credit, which hurts your personal credit score because it doesn't report there, and there's no consumer credit pull. And you really need this because business credit determines if you're going to get a loan in the future, the amount of loan you're going to get, and the terms you're going to pay. Okay, and this is one of the things that, again, people with good personal credit don't seem to sometimes understand. They don't understand why they're not able to walk into a bank and get a loan without business credit. Well, you're applying for a business loan. Banks really look at the quality of your business credit. Business credit, when it comes to getting a loan, in a lot of cases, is as important as your consumer credit is to getting a mortgage, okay, because you're applying for money for your business. So they want to see what you've done in the past. So a lot of things that really are determined based on business credit. But look, what's nice about business credit is if you think about what you need money for to fund the business, probably about 95% of the money you need, you're able to get through business credit. You know, like I said, the office supplies, the computers, the supplies to fix up houses, the fuel and stuff you need for your truck, whatever industry you're in, using fleet credit cards, you could even get auto vehicle financing. You can get a car loan without a personal credit check, or get commercial vehicles without a personal credit check. You can get, I'm looking at my board of real approvals now, $40,000 Dell credit card, a $25,000 fleet credit card, a $16,000 Pitney Bowes credit, okay? A lot of my friends, because I own the consumer credit repair industry, are still in that, or business are still in that industry. So they put out a lot of stamps. Their whole industry is based on stamps and postage. 16,000 at Pitney Bowes, or 11,000 Visa, or 11,000 Bank of America, $25,000 at Home Depot, or 20 at Costco, or 20 at Sunoco, or 12.5 at Apple, or 15 at Office Depot, or Sears at 15. I literally, if you come to my Periscope and my Facebook Live, I'm looking at a bulletin board with all real approvals on here of those amounts. So if you think about what you need money for, in most cases, you're able to use business credit to get most of it. Store credit, fleet credit, Visa cards, MasterCards, maybe the other 5% you still need to get a loan for. But if you need $100,000 to start your business and you can get 95 of them from business credit, that leaves very little that you need to try to get another way. So I tell you this because even if you can get a loan, you should still have business credit. But even if you can't get a loan, that's okay. You can't get a loan because you don't have a strength. Get business credit because it gives you a strength, and then that helps open up the loans to make you more lendable. Whew, we covered actually a lot more than 25 when we break this down, but that gives you most of the legitimate funding options I've seen out there currently in the marketplace today. We've talked about ones that get you rates less than 1% with no consumer credit requirements. We talked about a bunch that don't have cash flow requirements that you can get as a startup. We talked about a bunch that you can get only based on consumer credit. We talked about a bunch of credit lines. We even talked about business credit, which is a catch-all if you don't have the cash flow credit or collateral to qualify for a loan. So remember, we've got a link, creditsuite.com/get funding. If you want to talk with us more about getting funding, if you want to see what you can apply for, go there. There's, I don't know, like a 6 or 7 questions. We asked, I think, for your name, your email, your phone, and then we ask you 3 qualifying questions, 3, and you're done. And then you'll talk to a finance officer on our team, which again, you'll pay no money to ever, and then they'll help talk through this with you. They develop what's called a finance blueprint of what you can qualify for now and what you'll qualify for in the future. They'll even help you with advice on fixing certain things. Like if you have consumer credit issues, we can refer you to a credit repair company. If you have inquiries, we can refer you to somebody to help. We can get you help in those areas you may need to help make you more fundable. Our strategy is pretty simple. We just want to we think everybody that wants to start a business and get money should be able to. So we have solutions for you, whether it be business credit or loans, to help you. And even if you can't get the loan you want right now, then we help put you down the path that you will. We give you the advice on the tax returns and on the credit and anything else you need to know. So we help you get money in the short term for what you need, then develop a long-term strategy to get you all the money in the future. That way, whether it be now or a year from now, whenever you need money, you don't ever have to go look anywhere. You just basically call your finance officer, they go to work, they negotiate the rates and terms. We use our leverage to help get the deal done. And by working with one source that deals with all funding options, it just helps you to qualify for the most amount of money, basically. So process. So thanks everybody very much for taking the time to attend. A lot of cool things coming. I'm going to be going, now that I have a content person on our team, I'm going to be able to deliver these every other week consistently, and I'm also going to be doing YouTube live on my off weeks, and I do Periscope and Facebook live weekly, and soon to be doing Instagram and live as well. So make sure you grab our free guide at creditsuite.com/EIN or right on our website. That'll get you on our list, and we'll keep you apprised of all those things as they come out. All right, thanks everybody very much for taking the time to attend. I hope you all have a great day. Please reach out to us and let us know, 877-600-2487. Thanks everybody. Have a great day.
You've been listening to the Business Credit and Financing Show with your host, Ty Crandall. Watch for our next episode to get even more insight on financing and growing your business. And don't forget to check us out online at creditsuite.com for even more business growth strategies.